Aalok J Patel, ED at Arman Financial Services, joins us on the show right now. Aalok, hi, good morning. This firstly been a PE exit by RIF Northwest, and we had the buyers in Reliance Mutual Fund as well. What is leading to such kind of interest in your company by mutual fund investors?
Well, we have quite a long vintage in the financial inclusion space. And I think the financial inclusion space, especially microfinance, has been getting a lot of buzz in the last, at least the last few months, if not the last few years. So Incofin, which has a fund called RIF, had invested in 2011 when we were a very small company. I mean, we are still quite small, but and their horizon got over. So yesterday they exited their shares, and the shares were picked up by several, as you said, Reliance mutual funds and a couple of other HNIs. So I think there has been a lot of buzz in the financial inclusion space, and if you're not too confident on the small finance bank space, an NBFC, MFI, myself is probably a good bet.
Is Reliance Mutual Fund the first mutual fund which has invested in your company, or there are other mutual funds which have a presence there?
No, that's been the first mutual fund we are quite fortunate, but yes, that's the first fund so far.
Aalok, what is the kind of capital raising that you're planning going forward? And what are your growth plans really, say, on a 2 to 3 year basis from here?
Yeah, so as far as our capital raising, so the first step to that was, exiting the current investor, which was RIF Incofin. And so we accomplished that yesterday, and they got a great exit by any measure. And now we'll have to, we are thinking of fresh fundraise in the next coming 6 to 12 months. In what form or shape, it's still not concrete yet. So that will be after several discussions with the board and stuff. As far as our growth plans, all things considered, we have been growing about a CAGR of about 50 to 60% for the last 5 years. But that's going to continue at least for the next 5 years or so. So our target next year is about a 60 to 70% growth in the AUM and disbursement numbers. And considering we are an NBFC and we have a capital adequacy ratio by the RBI that we have to fulfill, that's why we'd be going for the tier 1 capital raise. So right now we are working on a tier 2 capital raises just to temporarily delay the dilution. But other than that, so you can expect a good about 60 to 70% growth at least in the next.
What is your total funding requirement, both tier 1 and tier 2?
So as far as tier 2, we are trying to raise about 25 crore in the coming 2 quarters. And tier 1, it's not completely finalized right now, but it would be maybe about 50 to 100 crores.
Okay.
Just leave me with the other growth projections as well. You mentioned a CAGR growth of almost about 60% in the next few years to come as well. More in terms of the fiscal year close, what is it that you're hoping to do in terms of revenue as well as profit target?
Yeah, so as far as the profit, the more you leverage, the ROAs tend to go down and the ROEs tend to go up. So as far as profitability, we are targeting somewhere around 18 to 20% ROE in the coming years. We had about a PBT of about 12 crores, and you can probably expect about a 40% growth on that in the coming year. So, so the revenue side, again, it's going to be slightly higher. The revenue side will be about a 50 to 60% growth.
Find us on Facebook at facebook.com/ETNow, and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.